Welcome back. Now for AFEX Commodities update. We see the value and volume and deals of the AFEX Commodities in the week ended December 13th were in the green. Let's bring in Femi Kende now, structuring and origination analyst at AFEX to tell us more. Great to have you on the program. Good morning.
Good morning. Great to be
Yeah,
here.
great to have you. So given the current performance of, stables on the exchange, are these commodities expected to follow their, current upward trend? But before that, let's have the performance for the week.
Right, great. So I'll be presenting the FX market commodities update spanning the period of the 7th of December to the 13th of December 2021. For the reporting week, we actually saw a significant surge in the level of activities on the exchange in terms of the value traded, the volume traded, and the number of deals executed. For the value traded, we actually saw the execution of 597 million contracts, Naira contracts executed on the exchange. This represented a 97% increase week on week. For the volume traded, we saw the execution of 2.27 million contracts executed on the exchange, representing a 116% increase week on week, and also the number of deals increasing by 127% week on week. For the financial benchmarks on the exchange, we actually saw the ACI, that is the AFEX Commodity Index, and the AFEX Export Index following opposite direction for the reporting week. For the AFEX Commodity Index, we saw a marginal increase of 0.52 to close the week at 439 basis points. However, for the AFEX Export Index, we actually saw a marginal decline of 0.98 to close the week at 192 basis points. For volume traded across all commodities, maize continuing to account for a significant proportion of the trades for the week, as 2 million contracts of maize were executed this week. However, soybean, paddy rice, cocoa, and cashew were also traded for the reporting week. In terms of commodities prices, maize was actually the top gainer for the week, closing at a 7.01% increase to close the week at 197 naira per contract. However, cocoa increased marginally by 0.01 to close the week at 1,220 naira per contract. However, paddy rice and cashew followed an opposite trend, as paddy rice actually declined by 6.81% week on week to close the week at 205 naira per contract, while cashew closed the week at 450 naira per contract, representing a 6.25% decline week on week. For more information about our report, you could actually check our website, that is www.afexnigeria.com, or you could follow us at our social media handle at afexnigeria.com.
All right. So, looking at the performance of stables on the exchange, are these commodities expected to follow, this current upward trajectory? Because I heard some analysts said next year, we might see commodities prices nosediving.
Okay, interesting. So if you look at the fundamentals backing staples in the country, right, and if you look at, if you correlate this to the current period that we're in currently, you understand that we expect a higher consumption of these commodities in the country as at this period because of the festive periods. Also, by base nature, or looking at the base nature of commodities in Nigeria, we know that demand consistently outweighs supply by a significant proportion, right? So since it is less likely for the regulatory authority to open the access of FX for people to actually import these commodities, it means that domestic consumption has to be supplied by domestic, has to be serviced by domestic supply. With this in mind, we expect that these staples will actually continue a bullish trend into the next year.
All right, then how well can these stables actually hedge against the erosion of capital, compared to other asset classes?
Right. So if you look at the return that the ACI, which is the AFEX Commodities Index, actually gave within the commodities period this year, you actually observe that the index actually closed the year at 42.1% increase season to date. If you now also cross-reference this to the performance of the all-share index, you actually see that the ACI consistently over the last 4 years has returned an average of 33%, whereas the all-share index has returned an average of 9.34% in the same period. So with this in mind, we know that the commodities market has consistently offered superior returns. And also looking cross-references this to inflation month on month, we see that the ACI has continued to beat inflation by about 9.7%. So with this in mind, we know that investing in or having exposure into the commodities market actually helps prevent the erosion of your capital and also gives superior returns at the same time.
All right, Femi Kehinde, structuring and origination analyst at AFEX. Thank you so much.
Thank you.
All right, still on AFEX now, our next conversation. Well, before the COVID-19 pandemic, the world was already not on track to meet the commitments to end world hunger and malnutrition in all of its forms by 2030. Now the pandemic has made this significantly more challenging. Also, conflict, climate variability and extremes, and economic slowdowns and downturns are the major drivers slowing down the progress, particularly where inequality is high. So if the world is at a critical juncture now, where do we stand now? What can be done to help build forward better and put us on track to achieving zero hunger? Well, let's talk to Michael Martin, Portfolio Manager at AFEX. Great to have you, Michael. Good morning.
Hi, Ladi. Good morning. It is always a pleasure to be here.
Great to see you again. So according to a UN report, a high cost of nutritious foods mean billions of people cannot actually eat healthy or nutritiously. What are the direct means to actually address this?
Ladi, thank you very much for that question. I think when we talk about the cost of food or nutritious food, as the case may be, there are a couple of factors that we can touch upon. I think the most important one would be that we necessarily need to increase, the volume of food that is available in the country, that is the quantity of food that we produce in the country. I think it is the case that right now we've spoken at different times how, smallholder farmers currently account for more than 90%, of the agricultural production within the country. I think it is the case that that needs to change, significantly if we are serious about increasing the volume of production within the country. I think that's another issue that also needs addressing with regards to the quantity of production is also the seasonality issue. And it is the case that because food or commodities rather, or food in general, are only available at certain times in the year, and there's usually a higher demand for those commodities at that same time, you tend to have those costs rising significantly over an 8 to a 9 month period. I think if it is the case that we need to switch away from just seasonal cultivation to all year round cultivation so that we can make sure that we have more than enough volume available for people to consume all year round. I think another issue that also bears mentioning is the quality of food that is being produced within the country. In addition to having better yield per hectare, I think it's also important for us to also have a higher nutritional element per hectare. And how that will be done is by us investing a significant amount of money and capital in research so that we can essentially get better seedlings for smallholder farmers or maybe even commercial farmers to cultivate. Other issues are largely systemic, right? And some of them would have to do with the cost of inputs, which feed into the cost of cultivation for smallholder farmers, which is basically to say, can we provide more inputs to a larger range of smallholder farmers, or can we also subsidize the price of those inputs so that it's easier for them to buy? Other issues would have to range from storage issues, which basically stipulate that we don't currently have enough storage capacity to cover for the volume of production within the country, which then of course means that a lot of those commodities need to be sold, tend to be sold rather within a very short period of time. Other issue would also be logistics, which basically feed into the price of moving goods, commodities and nutritious foods in this case, from one place to another, which has largely been some of the issues that the industry has faced over time.
Right. You did mention cost escalating factors and storage, but how can the government and private sector come together and make this better?
Thank you very much, Ladi. I think when it comes to addressing the cost of food, people very often lay claim to the fact that what is largely responsible are the factors of production. But I don't think they contribute in the way and the way and manner that we expect. So let's think about it for a minute, right? If you think about land, land doesn't necessarily contribute to higher costs in the sense that there's still a significant portion of arable land uncultivated within the country and also even the continent by extension. So it's not the case that there isn't land available for cultivation. What might be the case is that we need to switch and be more efficient, either with the land that is currently being cultivated, or maybe switch into better commercial farming, which tends to have a better yield, in terms of production numbers. In terms of labor, I think we can broadly assert that the cost of labor within the country is cheap. What might be the case is that we need to incentivize a whole lot more talent to come into the sector so that we can essentially find better and more innovative ways, to solve some of the problems that currently bedevil the industry. And when you think about capital, being available in the sector, I think there are two broad issues that need to be addressed. First is when we proposition international development agencies, they're usually far more interested in funding smallholder farmers, which is great because it does help increase, their livelihood and by extension their income too. But it is the case that if we are serious about addressing, the volume and the production issues, we will need to switch away from that model because as it stands, it is not sustainable. Another issue with capital is the fact that we haven't had significant amount of private capital invested in the industry. I mean, historical figures would suggest that, that number is less than 5%. And that's largely due to the fact that we don't have enough data for investors to make a risk-adjusted, investment decision about the sector, which is some of the problems that we are also trying to solve, at AFEX Commodities Exchange. Lastly, I think the last issue that also needs to be addressed would also be storage. Right now, as it currently stands, Nigeria produces more than 30 million metric tons of grains every single year, but we only have about 1.6 million metric tons of storage capacity, and only even a small percentage of that is operational. If you look at the percentage range, we are at less than 5% in terms of our absorption capacity. That is our ability to store grains over the course of an entire year. If you compare that with South Africa, South Africa has more than 130% in terms of absorption capacity. China has more than 100%. So I think it is the case that some of the factors of production that we have mentioned may not necessarily affect the cost of production or the cost of nutritious foods as we would expect.
Right.
In terms of what the government and private sector need to do in order to address some of those issues, I think it is safe to say that we need a broad range of investments across the agricultural value chain, from production to aggregation to also fixing some of the infrastructure issues with regards to storage, and then also with regards to logistics. Policy is also another issue that would also need to be addressed in terms of also addressing the high cost of nutritious food in the country.
Yeah, and but how does AFEX, collaborate with other players across the value chain to sustain this, food systems and build even more a more resilient system?
Thank you very much, Ladi, for that question. As you well know, we at AFEX, we are obsessed with the vision of helping Africa feed itself.
Right.
And we have been working, with different players across the agricultural value chain. With regards to some of the work that we've done, with the government in recent years, we have collaborated with them on the Anchor Borrowers program, which does help to address the production side of the conversation. We are also in collaboration with the federal government, working with in the Strategic Grain Reserve, which is to address some of the price volatility that we tend to see with commodities over the course of an entire commodity trading season. With regards to private players, we do help private players with the financial arm of the company, help them raise capital, from the financial market so that they can essentially purchase commodities and essentially reduce their cost of production, which eventually feeds into, the final price that consumers pay, for the end product. With capital market operators and in concert with some of the other players within the agriculture landscape, we are providing access to markets. So for smallholder farmers that want to sell their commodities, we provide access to market for them. For retail and institutional investors who are just looking to partake in the agricultural sector, either on a momentary basis or on a long-term basis, we do provide veritable investment products for them to invest in. So those are largely some of the collaborations that we've had, both in the public space and then also in the private space. And as you're well aware, we will continue to collaborate with a whole lot more players within the agricultural value chain in the years to come.
All right, Michael, you guys are doing a whole lot there. Michael Martins, Portfolio Manager at AFEX, thank you so much, and enjoy the rest of your day.
You're always welcome, Ladi. You too.